Hello traders, this is my morning video. It's about 2:45 in the morning. Uh, Storming here, keeping me awake, so I figured I'd go ahead and get this done. This is not going to be quite as detailed for actionable trades like I typically put out. Um, you know, so I'm in a Zoom room during the day, during the morning session. I can call those out on the fly. This is more of an educational video, trying to explain why I like using Fibonacci retracement plus the market webs and a volume profile analysis. And there's two distinct differences between the strategies. With the Fibonacci retracement, you're actually drawing from ranges, and you are not taking into account any type of volume distribution, and you're not taking in any time distribution on Fibonacci retracement. You're solely focusing on the entire range and Fibonacci retracement based off that range. Just like right now, we have come off of a 50%. I don't have that on this chart here, but come down here, get your retracement, go back up to the highs here, okay? And as you can see, the SPY from the very lows to the very highs, that's our 50% retracement. Now, volume profile theory. And I called out yesterday morning as this being a resistance level early at pre-markets with the traders in the trading room. This is the yearly value that built out way back in 2018. So all this inventory that built out, uh, auctioned, the auctioning price for 2018, it all built out in the highest place that buyers and sellers found equilibrium was right here at this yellow line on a yearly basis. And that's why I have a really heavy yellow line there. That's a yearly value area. And that is right now, as you can see, that's acted as support before. Now it's acting as resistance to the upside. Okay. And buyers and sellers are, so that is a critical point to realize why the buyers and sellers are stopping at this point because of they're pushing one direction as far as they can, and this is the bull bear cross scenario at yesterday's highs on the SPY. Okay, now that's the yearly. Now if I go down on a daily time frame, okay, now you're getting down into these distributions. You're actually, Fibonacci retracement does not take into account time, where the market webs, you have different values for different time periods, and you can see how price is acting in relation to different time periods. Like this one right here, this is monthly webs. So for last month, this was our trading range for S&Ps, and we came right up to range highs from last month and got rejected. So this is a secondary confirmation of this being a resistance line. I knew that coming into yesterday's um, trading. So we had a monthly resistance and a yearly resistance both hitting at yesterday's highs, and we found some responsive selling at that level yesterday. Okay. Now I'm trying not to put too many levels on here to not confuse people, but that's some things that I do want to point out going forward here. And then you just keep going down in time frames. Another really good one, if you go down on the 4 hour, that will take you. That's still a weekly webs. You're getting the same. No, that was the monthly webs there. Now you're going down to your weekly webs when you go down to your 4. Okay, and on our 4 hour, we are below the 200-day moving average on the 4 hour. So on our shorter time frame, we are getting some selling pressure here. So and then you just keep going down, and as you can see, uh, on our 1 hour, we are above our 200-day moving average. Okay, so this is kind of what I'm looking for. These things are, you should have the lower time frames, uh, uh, you know, underneath on a trend. You want your 200-day moving average to pile up on the downside, uh, below price in a bullish trend, and that's what we have right here. So basically, we've already cleared the 1 hour 200, and now we're up here trying to break out all this resistance and the 200 4-hour moving average. And in this situation, considering all this resistance overhead, I think what we're going to do the rest of the week is build out somewhat sideways for the week and actually create a situation where we can get a short squeeze for a potential breakup, or we're going to break down. Okay, that's a few of the things that I'm looking at here. Now, my dotted lines here, those represents the some historical volume point of controls uh, on a monthly basis. So, what I'm actually thinking here going into this week, this represents our trading range for this week, in my opinion, for the SPY. So just keep that in mind. I think this is we're going to be trending in this range. So just something to take note of going forward here. And if I go down even on tighter time frames here, now we come into our, excuse me, uh, one of our smallest time frames here. Let me see a 15-minute here, see if I can see anything a little better here. Yeah, okay. And if you do a fib fans and see what's going on here, come all the way up here, the trend is still intact even in the pre-market here. Okay, so just keep that in mind here. On the 15-minute, this is where we're getting a divergence on our SPY. We are crossing down on the lower time frames. We are starting to break that 200-day moving average on the lower time frames early this morning, suggesting some continued pressure, downward pressure into tomorrow's open. So that's just something to keep in mind. These are critical levels that I try to, Europe hasn't even opened yet, but Europe has had just like everything else, has had a massive short squeeze already. And so it's likely to see profit taking in the markets going into today's session. So we're already seeing signs that, the shorter end of the time frames are breaking the 200-day moving average. And this midline here is the primary uptrend that started last Thursday and potentially breaking and taking lower prices after we've already come off very serious resistance in today's session. Okay, that just gives you a quick rundown on the SPY. Now, try to do the same thing here on the other indices real quick. Okay, 1 second here. We'll start out on the longest time frame here, make things easier for all of us to identify things. And basically, one thing note that I want to point out right here, and I'm going to zoom in here. Hopefully, we can see it a little bit better. Yearly, this is our yearly value and our highest monthly value ever built out for Qs, because a lot of that move was it was completely rejected. But this is the highest monthly value we've ever built out on the Qs, and we are still trading above both of these levels. Even after this massive sell-off in the markets, we have still not given much of anything from a technical standpoint for the Qs. So something to very important to realize going forward in today's session, that situation. And so we're up here at the high of 2019 value as we speak. This value right here is the where 80% of the value in 2019 was put in, and we're still at record highs. So keep that in mind going forward here in your trading. This blow off top here, I mean, this got trouble written all over it, in my opinion, going forward here. So just keep that in mind going forward. And then I come down at my lower time frames here. This is our yearly value way down here on the Qs. Even on a daily standpoint, we've come up above the 200-day moving average on the daily, and it is rejected. And the 4-hour 200-day moving average, we're still above that. So we not only had a massive move up on the daily time frame here, it blew through our 4-hour 200 moving average, tried to go above the 200 on the daily, and now we are getting some rejection off of that, what could be very serious resistance in the trading going forward here. Realizing that this is the highest value we've ever had, this suggests to me that we are still way overbought on our technology. So we'll see what happens here, but I think it really has to come in here for a proper reset of these markets, in my opinion. And then on our 4-hour, we're still above, so far this morning. on our Qs on the 4-hour 200-day moving average. Trying to keep it as simple as I can, and we'll go from there. Come down to a 1 hour. We can still see, similar to the S&Ps, the 1 hour is below, but we're and actually we are right above the 4 hour on the Qs. So we are showing still more relative strength going into tomorrow's session on the Qs than we are with the S&Ps. Okay, and the final thing I want to do. So basically, we've had this breakout. I want to put a fib fan on here. Okay, the trend is still intact. This midline trend, and so this area here showing relative strength has me concerned that they are going to rally the open. So I was really wanting to see the Qs, especially given the way the charts were looking. I was really wanting to see the Qs showing a lot of relative weakness going into tomorrow's session. So we are marking below the 200-day moving average. There's a reason why price is stopping here to the downside. Uh, Hopefully we'll get some profit taking in technology in the European session. So, but we'll just see what's going on here. But I do think we're trading in a range. This is just a swing high. A swing high for Qs. Okay, and so there's not really any type of resistance, a significant resistance to the upside on the Qs, unfortunately. So, we're pretty much capped by the SPY and not necessarily the Qs. Okay, which could, we'll see what happens. Not being capped on the Qs, that has me a little concerned, or thinking that we are going to try to build a base into next week's earnings, for the markets to try to build out. So, something to keep in mind going forward here. And like I said, similar with the S&Ps, I think we are range bound here. Right down here, the 188.11 would be my initial. And if it got really bad, the 185.50 area, which should be a responsive buy point, in my opinion, if things got really bad in the next couple of days. And man, we've been seeing some wild rides the past couple of days. And I'm not necessarily thinking that's going to continue. Because we've had this bullish run. We actually need time to digest that run. So, something to keep in mind going forward here on your trading. Okay, on our Russell, as you can see, we have not even come up and back tested the yearly volume point of control yet. This built out, let me see here. This would build out, oh shoot, where's that at? 2019. Actually, I can't even go back in time. I got the wrong line on that. Wait a minute. Sorry about that. I didn't have my view far enough out there. Okay, this is the 2017. This value area built out back in 2017, so it's worse on the Russell. And we haven't even back tested that yet on the Russell. A lot of people are thinking bullish on the Russell here, so just keep that in mind going forward. We could see some relative buying in the Russell. This should lead to the upside if we are going to get some buying pressure in the markets. What I am noting here, okay, let's go back down in the lower time frames here, and daily 1 year, and basically on a monthly basis, we haven't even back tested the top, so we're seeing relative weakness so far in the Russell this week. Still haven't even the range highs yet, and back tested this trend line on the Russell going into the oil inventories and potentially Thursday a Saudi deal for crude. I mean, I think it's already priced in, but we haven't tested this range high yet, so something to keep in mind going forward here. Um, so the Russell does seem to be relatively weak versus some of the other time frames. And if I go down and start going down at my charts here, we are above the 21 SMA on our 4-hour, but still well below, even on our 4-hour, the 200-day moving average. Go down to the 1 hour. We are hugging this 200-day moving average for the Russell right here, right now. And this is a volume point for a swing low back in history. This was back in 2016, I think. Okay, so this should have some value at this price point. So keep that in mind going forward. That is a prior swing low pivot point um, back in history. So that's why I mean I'm kind of going down in these time frames to give an idea. It's more constructive for the IWM for a bounce than actually a breakdown, depending on how these markets play out. So just keep that in mind going forward in your trading. This is a seems to be a much tighter range for the IWM. So that's another thing we want to take away. We want to have that we're building higher, um, not necessarily. Well, we're still putting higher highs and higher lows, but that could change anytime now. I think it's channel bound as well. We'll see what happens and go from there. And then I'll go down to my final one, 15-minute here. And basically, here we are right here, right now on the shortest time frame. And we are trading still above our 200 moving average. And the final thing that I do here, as you can see, Thursday was the lows for the other two indices, but we actually marked a lower low Friday. So on a shorter time frame, the Russell was marking new lower lows. So I have to make a shorter fib fan, and we are below the midline on the trend. So something to keep note. The markets were to sell off. I don't think we're going to have near the weakness in the IWM, but if we start breaking the 110.64 area, all bets are off. I mean, that like I said, that is a prior swing low support area, and things can get really bad really quick on these markets if something like that were to happen. Okay, one thing that I'm noticing in the pre-market or in the after-hour session, right here, the big ask seems to have recovered, but we were marking prices going all the way back awful close to our yearly value area. Basically, this is a bull bear scenario for our financials. So we're going into next week trying to decide whether or not we want to have a bearish breakdown off of trend on our financials. And keep in mind, we've never ever had 0% interest rates. The banks effectively going forward here are going to have zero interest rate income. And the loans they give out, really, you're going to have AAA credit to justify even issuing those type of loans. So, or government backed loans. I mean, whenever you go into zero interest rate policy. So I really think we're going to have horrible, horrible earnings next week, and the banks are going to take us lower starting next week, in my opinion. But some people are saying, "Oh, the banks have bottom," and I was like, "How can you say the banks have bottom when we're in a situation that's never happened before?" Okay, so basically, one second here. Okay, what I'm seeing here in the financials, this swing low, we have completely rejected that swing low. Now, these are your monthly webs, okay? And as you can see, these monthly webs are critical. That acted as support, support, and now we are getting resistance on our financials at that price point going into earnings. Now, this could all change, in my opinion. You never know what's going to happen, but that's something to definitely keep on watch going forward here on these financials. What's going on, and so something to very very important to keep in mind going forward. Let's see if what I can get on these lower time frames here. See if I can see discern some of the stuff. Yeah, right here, right now, we're coming right back inside. This was the uh, 2117, lower than 2117. This is the market maker move high, I believe. Yeah, market maker move high for the week. So keep that in mind for. I think I got the alert set up wrong. Yeah, I got the alert set up wrong. This is the market maker move high for this week. So keep that in mind that we are coming back inside the expected move for this week, right back into a yearly pivot point, uh, which is acting as a magnet, continues to act as a magnet for this. So basically, I'm actually thinking we're going to trade right in this range going into next week's earnings. And then that's whenever we're going to start potentially start breaking below that yellow, the 2060 area on our XLF going forward here. And some of the shorter time frames here, uh, you can't see it right now. I can show you here. It's a lot easier to see on this one here. One second. Don't want to be deleting a bunch of stuff. Okay. Right here, we marked price right back down to our trend line and that 2060 area. Like I said, this morning, prices seem to be marking a little bit higher early morning here, but we were getting prints, bearish prints on our financials. Somebody had a market order or something they were trying to get out of financials and bringing it right back down to a significant bull bear cross scenario for financials and on the 1 hour, the 200-day moving average going into tomorrow's session. So something to really keep in mind here. This is an oscillating line. This has been acting as an oscillating line. It's not a support line anymore. We've actually on the financials here we have started oscillating around that critical bull bear scenario. So the markets fall, we're going to be breaking all this going into tomorrow's session. So something to definitely keep on watch. I'll go down to my last time frame here and get a really close look here. And well, the my my lines they change whenever I go down these shorter. You have to ignore these right now. But yeah, as you can see, even on the shorter time frames, we're 2080, 2060 is about the trend line area. And so definitely something to keep on watch here and going into tomorrow's session. I'm like I said, I'm not overly bearish this market, uh, but I think we're going to be chopping around here and just take some quick scalps during the course of the day. And I think what we're going to be doing is actually uh, trying to hold out. Uh, one scenario we're going to hold out right down here, bull bear cross going into next week's earnings. That'll be next Tuesday. We have a bunch of banks reporting because this is really pushing to the bullish side in a zero interest rate environment. And I find it really difficult as an investor for us to be pushing out way above these levels into these earnings events in a situation that's never happened before. So that's a scenario which I'm looking at here. I'm still leaning more to the bearish in the markets, but I'm not overly bearish. I mean, the 1967 area, that's still well within this channel. I think we're halfway down. We come back down here, then we're gonna probably rally back up right into this zone here, going into next Tuesday's uh, the start of all the financials hitting the tape in the markets. So something to definitely keep and watch going forward. Basically, that's a little bit of education of how I look at things. And I didn't take, like I said, most nights I don't even take swing positions overnight. I wasn't very confident about the what was happening in the at the close yesterday, so I just decided to just sit on my hands and reload today. And we can take a real quick look at our VIX and our crude. VIX is maintaining a pretty good bid here going into the opening here. And then let's see here. Is there any others that are really standing out here on our so our E-minis, crude. Crude's up $1.14. So we had our inventories. The Oklahoma inventories came out last night. They must have not been quite as bad. Not as big a build as expected. We do seem to have a little bit of bid here in our crude oil space going into oil inventories today. I just find it very difficult. If it wasn't for the headlines, potential headlines hitting Thursday, I think this thing would be already in a lot of trouble. So we'll see what happens here. Bottom line, I do think there's going to be some sort of deal, but it's well, but it's probably going to be far less than what traders are expecting, and so we'll see what happens going into today's session. Basically, I apologize for not giving specific call outs in the stocks, but I do think we're entering a chop fest area, and I can't really call stuff out in my opinion. In the pre markets, I'm going to have to wait and see how the price action is unfolding. Thanks a lot, and I will see you yeah, tomorrow, I guess.